Welcome to the Daily Podcast Update, where I'll go over the action in the market for Wednesday, May 21st, and we'll see how things look for Thursday, May 22nd. The S&P took a pretty big hit on Wednesday, closing down 1.61%, a notable move compared to recent sessions. The index opened lower, dropping below the S1 support level at 59.15 and briefly finding support at 5900. Before being rejected at the daily pivot, further declines were seen below S3 at 58.47. The S&P ended up closing slightly above the day's low, but trading volume remains below average, suggesting a lack of conviction behind the sell-off. This downturn wasn't isolated to just the S&P 500. The Dow fell back below its 200-day moving average, small caps dropped a steep 2.83%, and mid caps also weakened. All 11 sectors declined, with real estate and healthcare taking the hardest hits, while communication held up relatively well. What were the key influences? Several factors converged to create a challenging day for investors. Going back to last Friday, Moody's Downgrade continued to ripple through the markets, contributing to the 1% drop we saw at the open on Monday. Retail investors, often referred to as dumb money, jumped in to buy the dip, briefly pushing prices higher. However, the momentum faded on Wednesday. Rising interest rates also played a significant role. The 10-year yield climbed above 4.5%, closing at 4.6%, while the 30-year yield has gone up over 5%. These levels sparked nervousness among investors. Adding to the pressure, a poorly received 20-year bond auction further soured market sentiment. Behind domestic factors, a hotter than expected UK CPI added to the negative backdrop, while ongoing concerns about rising U.S. debt and debates over the so-called Big Beautiful Bill fueled uncertainty. These macro pressures set the stage for Wednesday's decline. Looking at technicals and sentiment. From a technical perspective, the market showed signs of vulnerability. After climbing from the April lows, the S&P 500 had become quite overbought, and negative divergences in key indicators signaled potential weakness. The VIX, called the market's fear gauge, rose back above 20 to 20.87, reflecting increased volatility. The parabolic SAR has now flipped bearish, with the dot moving above price, a clear negative signal. Momentum indicators such as stochastics, the PMO, and TTM squeeze also showed declining momentum, with some actually turning negative. Both the S&P and NYSE McClellan oscillators dropped below zero, reinforcing the bearish outlook. Sentiment has also shifted slightly. After peaking at 71, investor sentiment has now dropped to 66, moving from overconfidence to caution with a downward move. Retail investors who bought on Monday's dip are likely facing losses, which could shake out weaker hands in the days ahead. The smart money indicators are mixed. While the Chaikin money flow remained positive, the Chaikin oscillator has turned negative, with accumulation distribution producing mixed signals. Looking at asset performance and broader trends. Outside of equities, other assets provided some bright spots. Gold rose, buoyed by a falling dollar, which dipped below 100 again, and growing concerns about U.S. debt. Oil, however, has remained subdued, trading in the low 60s. These movements reflect a broader flight to safety for gold amid Wednesday's equity market turmoil. What is the outlook for Thursday, May 22nd? Several events could shape the market's direction. Key economic reports include initial and continuing jobless claims, which will be closely watched, along with existing home sales and global manufacturing and services PMIs. Geopolitical risks also loom large, with rumors of a potential escalation between Israel and Iran. Despite Wednesday's decline, the S&P remains positive across the short, intermediate, and long-term timeframes, as it holds above the 20, 50, and 200-day moving averages. However, the S&P is pulling back from overbought conditions, and further weakness could emerge if negative trends persist. One level to watch is the 5750 gap produced on Monday after the trade deal was announced, which could serve as an initial target if selling continues. On the positive side, seasonality favors gains for Wednesday. Historical data, the week after options expiration, tends to be up 2/3 of the time going back to 1980. Pivot points for Thursday are wide due to volatility in Wednesday's session. These pivot points have been posted on the YouTube community tab. In conclusion, Wednesday's action reflects short-term weakness but doesn't yet derail the broader uptrend. Investors should stay vigilant, watching for a potential bounce or further declines depending on Thursday's economic data and geopolitical developments, if any. As always, keep an eye on those key support levels and resistance levels, and don't let the short-term noise distract you from your long-term strategy. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.